So you might not notice them in a bull market, but in a downturn, defensive stocks could be the reason why you sleep better at night. This is stock number 5 in our 7-day series, showing you how to start investing in companies around you. And today's company is in all our bathrooms. Colgate. Let's key in the ticker symbol, CL, and we will be greeted by this dashboard over here. And on the right hand side, you can see that this is how the Oracle IQ chart actually looks like for Colgate as a company. We are noticing a lot more yellow and orange flags in the company. But that said, I think it's also important to bear in mind the type and the category of companies that you're researching into. So specifically for Colgate, I think they fall under the consumer defensive space, and they are like considered staple companies. So meaning to say, they are less susceptible to a lot of all these economic market cycles. And specifically, a lot of all these companies are being positioned during recessionary times to being the defensive stocks, and they are able to stabilize your portfolios. And specific for this genre of companies, we must have them both predictable and also profitable. That's why they can weather any storms ahead. But by saying so, does not mean that we give a discount in terms of the quality of the company, their moat and their valuation. No, I think all those still applies, but I think the key focus here is really on the predictability and the profitability segment here. So now let's look at the company overview. I'm looking at their historical growth rates, what are the distributions. You can see that pet nutrients makes up a very small percentage, roughly 22%, while the rest of it actually comes under the oral, personal and home care segment. By geographic region, similarly as a defensive company, we want them to be hugely diversified so we don't have any particular geographic region concentration risk. For Colgate, I think they score very well in this particular segment. They have a very big footprint across the world. So before putting in any real money into the company itself, I think it's important for you to have a better appreciation of the entire landscape in the whole consumer defensive space.